What if the biggest move in crypto hasn't happened yet, and most investors are about to be caught completely off guard? Because according to top Wall Street strategist Tom Lee, the current market setup could trigger a shock that sends Bitcoin and the entire crypto market into a move few people are prepared for. Not just another rally, but a shift that could redefine where digital assets go next. Lee says the signals building right now, from liquidity returning to markets to institutional money quietly positioning, look strikingly similar to the early stages of crypto's biggest historical breakouts. And if he's right, the move ahead could happen much faster than anyone expects. So what exactly is Tom Lee seeing? And why does he believe Bitcoin and crypto could soon leave the financial world in complete shock? Let's break it down. For years, investors have been told a simple story about Bitcoin and the crypto market. The famous 4-year cycle. Every bull run, every crash, every recovery, supposedly moving like clockwork. But according to Tom Lee, that narrative may be hiding something much bigger. Because what's happening right now inside the crypto industry tells a very different story. Take Tether, the company behind the world's largest stablecoin. In just a decade, it has quietly grown into one of the most profitable financial companies on the planet, reportedly generating over $20 billion in profit. Numbers that rival some of the biggest banks in the world, including giants like JP Chase. Think about that for a moment. A company born from crypto infrastructure, now competing with institutions that took more than a century to build. That's the real signal many investors are missing. This isn't just about a market cycle anymore. It's about a financial system evolving in real time, and crypto quietly building the next generation of global powerhouses. And that realization is exactly where Tom Lee begins his argument.
Just recently, at the end of last year, in the Middle East, and meeting with a lot of the original Bitcoin folks, many think there is a 4-year cycle, and that is affecting their behavior. So these folks who've made a lot of money in crypto, and their life cycles have changed because they might have been 20, 15 years ago. Now they're in their 30s and have other life decisions. They've been acting as if it's a 4-year cycle. So some of it is self-fulfilling in line. And I think that's true today. Like if someone went into a bank and said, blockchain offers finality and speed that your current systems can prevent fraud at scale and speed that your systems can't handle, I think you'd get the same look in a board meeting. But there's already proof, because take a company like Tether, which is basically a simple, it's a monoline company, it's a stablecoin issuer, but basically operates as a bank. They only have 180 billion of stable coins, tokenized dollars. It's not even 1% of M1. And their profit this year, okay, and I'm projecting, because I don't actually have their numbers, but I think if you look at their GAAP net income in 2026, it might be 20 billion, which would make them a top 5 most profitable bank in the world. And just put a, 15 multiple on it, 300 billion, or 20 multiple, 400 billion, that would make it top 5 most valuable bank in the world. The thing is, they have 300 employees because they do everything else on the blockchain. JP Morgan, which is the largest bank in the world, has 330,000 employees. So to me, like it's, crypto isn't accepted. Things are changing, as Justin said, but I think Wall Street wants to hijack that narrative, but I think native blockchain companies are like open source. They may end up being better businesses. Things that I think people forget is that crypto benefits from adoption. Like more people that use crypto wallets or end up using crypto as a settlement layer, the more the network effects take place. And that's why certain crypto projects are doing so well. In 2026, do I think crypto starts to become invisibly more part of everyone's lives? Yeah, I think that's 100% happening, because tokenization of dollars is now making money a digital good that becomes harder to differentiate between like what a dollar is versus a digital good versus what people ascribe value to. In other words, like, as we start to tokenize more things, then people just start to think everything is a form of money. And that actually grows crypto adoption. I can see that happening in a lot of ways. Tokenized stocks, trading on-chain, tokenized credit. This is all creating that invisible adoption of crypto and blockchain as a settlement layer. I think there's a lot of mainstream folks that are also going to be launching financial services products, from neobanks to well-known content creators. They're going to funnel millions and millions of people that may actually start to use crypto without realizing they're actually using crypto. And I think that that's a big catalyst. And I think that's some of the stuff you'll see in 2026.
Gold and precious metals have always been seen as the ultimate safe haven. For generations, investors believed nothing could ever threaten that status. But now, new technology is beginning to raise uncomfortable questions about the future of gold's security and scarcity. And when Tom Lee looks at the emerging quantum risk, it forces investors to think differently about where value may flow next. Even Elon Musk has joked about the possibilities. And with Elon, what starts as humor sometimes turns into reality faster than anyone expects. But beneath the jokes lies a serious question for investors watching Bitcoin and the broader crypto market. If technology begins to challenge traditional stores of value like gold, could Bitcoin become the next global hedge? Tom Lee believes this shift could become one of the most important investment stories in 2026.
But just keep in mind, precious metals has its own, quote, quantum risk, okay? And I'm a fan of gold. I'm not trying to knock gold, but keep in mind, gold is not scarce. There's a lot of gold underground. All gold is extraterrestrial. So if when SpaceX does their IPO and then they have money to launch to Mars, Elon Musk might find a gold asteroid. And again, he owns it.
Is that secretly what he's doing all along?
Yeah, he'll have his own store of value. But he'll not only be the richest man on earth, he also is the new central bank. And he's going to just have this cable towing this asteroid into orbit. But of course, another risk of gold is alchemy, because someone may have already discovered a way to knock an atom off to make gold, and those are quantum risks to a precious metal. So to me, if I was looking at it, and I'd love Dan's take on this, I think Bitcoin is, I agree with him, it is a great way to transfer value, and that is more important than the fact that some wallets are at quantum risk.